Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial opinions, and make your own financial decisions. Today is Wednesday, August 10th, 2022, and this is Blockhead Traders Weekly. On this week's episode, I am joined by fellow Blockhead trader Viper XL 007, and we are going to take a look at the current markets as well as dipping into some crypto price action patterns today. But before we hop to this week's content, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, a few of the other Blockhead traders. Love to hear from you, love to hear what you're trading, love to hear what type of content you want to watch on this channel. But hopping to this week's action, Viper, what a day today was. It's been building and building over the past few weeks where we've been kind of picking up steam. Concern point after concern point keeps coming up in the news, and we seem to tackle them positively, and the market seems to be shaking off a lot of its fears. Today, the CPI number came out. I believe they were expecting a 0.2% increase in CPI today, and the number came in flat, indicating that the consumer price index, that's the CPI number, is kind of leveling off for the month of July. What that means, Viper, is that is just another notch in the belt that there is potentially inflation control here. I won't say that inflation is going down by a long shot. CPI is just one measure of inflation. That's the consumer price index. I will kind of caution a little bit here. One of the things that I was kind of reading when I read through some of the earnings reports for big retailers, things like that, is that they're starting to claim that they're starting to hit the limit on the prices that they can pass down to the consumer. And so if your CPI number is kind of unchanged, it could mean that inflation is kind of backing off a little bit. It also could mean that the producers are not passing that inflation cost on to the consumer, which doesn't really flag a decrease in inflation, which is why it's not an absolute signal. It's something gone in there. So if you have to think, there's the other index called the producer price index, which is the price that the producers pay. That was not the number today. But if you see CPI not increasing and PPI increasing or something like that, these companies do have the option to not pass on those prices, which effectively means that will eat into their profit, which does affect earnings. So there's always, two sides to everything. Nothing is ever super rosy, but this definitely was a bullish news when it hit the market today, and the market reacted accordingly. I think within 5 minutes, the futures were up over 2% on the S&P, and then when things opened, it was kind of a buyer's market everywhere. Buy was going on. I don't know if you caught much of the action today, Viper, but what are you thinking about the CPI numbers?
Yeah, I caught a decent amount of it because, I had forgotten the numbers were coming out today, but then I was reminded last night. And so I had already put on a number of different plays and things that I was looking at and wanted to watch. And I was like, uh-oh, should I wait? Should I cancel those or see what's going to happen? But like we've talked about before with binary news events, and I was like, you know what, let me just go look, see where the trends are headed on different plays that I made. They were all, basically on trend patterns or starting trend patterns in my favor. So I was like, you know what good is it talking about it on this show of we believe that binary news events are catalysts of acceleration of trend rather than trend reversal moments, save for massive black swan events or things like that. So I was like, let's lean into that methodology. Let's do that. So yeah, I did watch and I saw that everything, like you said, accelerated in the direction that it was already headed, so to speak. And I think more than anything, what I felt this really reinforced now twice, because this happened with the rate hike what was that, 2.5 weeks ago, 2 or 3 weeks ago now.
Yep.
It reinforces what we've been saying on the channel here for a while, and that being all of this stuff for now is largely priced into the market, we believe. And as we, like you said, as we keep notching these things off on the belt and things keep not falling apart and melting down, it just kind of builds that thesis of all of this stuff being priced into the market. That absolutely doesn't mean we're never going to go lower, but it means it's going to take an unforeseen black swan type event potentially before that happens. And every time we get one of these major news things and everything just plods along its trend line or whatever, I take that as a very positive sign to that end.
So speaking of this price action and this accelerant when you hit a binary event like this, I know that you've been kind of trying to take a look at some of those trends and see what's increasing. What have you got this week?
Yeah. So yeah, let's take a look at some stuff here. Let's look at these scribbles on the screen. The whole binary event and accelerating and stuff. I think one thing I want to look at real quick first is Bitcoin. We're going to get into some of the trend lines and stuff that I have drawn here in the price levels in just a second. But I thought this was just another one of, I mean, just like we talked about on one of those recent previous episodes where we showed the acceleration of the current trend. So let's come in here now for a second. So on the 15-minute chart here, we can see we've been doing this oscillation on this level here, which we'll get into. Every time Bitcoin goes up, a lot of things in crypto go up. And every time it goes down, a lot of things go down. And so we're in this PTSD phase where every time things go down, everybody thinks this is it. It's over. We're going even lower. But, we were retracing from this test, a very normal test of this level that we keep pushing up against. And what we can see when the CPI data came in is we actually had just, as of last night, so Tuesday night, recording this on a Wednesday, in here, we had just finished a lower test or confirmation of support here at a previous level. And we were just starting the day on our uptrend. And then the CPI numbers come in and boom, we went flying up. But we didn't just, uncontrolled fly up. We came flying up and we stuck the landing, so to speak, on this level test. And now we have resumed business as usual, where we are now kind of retracing, forming a higher low, and working our way back up to that test. So I thought that was interesting because that just kind of goes to, like I said, what we've talked about before about these news events speeding up the trend, not necessarily flipping the trend, as long as it is within the realm of normal expectation. So what I wanted to get into, though, as far as things I've been watching, was I wanted to take another trip down technical analysis, TA lane, price action, and all that kind of stuff. Because there were two plays that I made and got decent profit on, and they were very fundamental TA stuff. And so while these happen to be crypto coins, not required at all. I mean, this is a very straightforward setup, and my theory is that this actually is existing in a lot of places right now, but it's very important to understand the fundamental technicals as to what the setup means and why it's important, or all that kind of stuff. So you don't just go look for a pattern and say, this is the one, I'm going to jump on it. So this started, we're going to look at the Polygon MATIC token. This started in our Discord, so shout out to our Discord of this all unfolded in there. I charted this chart, and we had some conversations around it. So right now, this MATIC chart that I have loaded here is actually rewound in time. So we're looking at July 10th is the latest here. So we are a month old on this chart. And so I noticed a couple things. I mean, just on the utility side of things, that's obviously not our purpose here, but Polygon is something that I think is well bottomed. when looking at its whole chart here, and is the sort of thing that, is a blockchain that has a lot of future use and current use. But so beyond that, this is the sort of thing that I'm fine holding if I need to for more of an investment than a trade. And now that things are warming up a little bit, that I'm, looking out for tokens or things that I'm fine trading and holding if I need to. So what caught my attention here was we obviously came down here to this, 31 cents. We come bouncing up, and we start to notice that there's this level forming here. So I wanted to go to a little more proper technical analysis. And so what we want to look for is the previous low. I mean, obviously, hey, there's all these lows up here, but we want to keep it sensible and, a range that we care about, like, way up here, $1.32. We're so far away from that. That's just not helpful to look at that, to back trace there. So we go back in time and we find this little guy sticking out right here, and we kind of drop a level there, and let's make that a little easier to spot. Because at the core technical analysis, it's always about keep what you've gained or you lose it and trend is down, or regain something that you've lost. I don't know if I just said the same thing, but point is, we have this low back here which formed, and on top of that, this is a low that eventually led to the all-time high. And so that's, again, another factor that's important here. And none of this is, my technical analysis has evolved rapidly over months. So, everything's evolving. I'm no expert on this, but I am constantly learning and growing in our Discord. So I drew this level and I was like, hey, would you look at that? Come forward to modern day. And we are rejecting off of this level quite distinctly and clearly. So what? We do this on all kinds of levels. Yes, but identifying important levels and when things happen around those important levels amplifies our interest to this. And so the reason, again, that this level is important is because this is a local low that launched into that all-time high swing. So that's what makes it important. And then when we chart it and we come forward, we want to pay attention to what's happening around important levels. So I'm going to run the clock here a little bit, and we'll see how time progressed. And so we're moving along, and right around here on this day, we come up and we actually got a close above this level right here at 63 cents. And I was like, hey, that's gaining something we had lost. So we had the level gained when we went up and made that all-time high. We come down this crash, and we get a bounce of support, some support, but this is waning support. We're not making higher highs. We just continue to make lower highs, which means we're not really gaining anything. We're just barely holding on. Then we actually dip below, and then finally right here is when we lose the level, and now it's gone. So the whole game at that point, when you lose the level, is get it back. And we obviously tried, failed, and then here we got this close above, and as soon as the candle closes above, we've officially gained that level. So what I noticed then is now if we go to a lower time frame and we take a look at this, now we got everything we're ever looking for in a gain. We gained, then we came back and tested and held. So ideally, if you are super confident, which I am not, on your technical analysis, you would actually maybe enter a play somewhere around here because you've already seen everything you need to see from a technical level. You've gained it, you've come back and tested, and you've confirmed support. So on a technical basis, that's all you need to see to make an entry. I was not that confident, so I ended up entering, I believe it was right around here, which still isn't a bad entry by any means, but I definitely waited to clear this new high. And so I got in there, fast forward, and, it just kind of kept doing what we anticipated it would do. You know, we kind of went sideways here, but this became support, and so therefore trend is up. Trend is continuation until proven otherwise. And so we just continued to go up, and I'll just close this out because good enough. You can see where we are today. We have not looked back since confirming that support, and we've gone up to now kind of get some new swing ranges up here in the 90s down to a new local low of 72. So I have since exited. I think I exited on the way back down, somewhere around 89, 90 cents. Did the thing I came to do. And that's another important thing. Like, even though I said I was fine holding this, ultimately I just want to trade, move on, and roll that capital forward. So we did the move I wanted to do, which was get that gain and move on. So that was a pretty good, confident win, you know, based on some fundamental technical analysis. Jumping over to another coin that we talk about a lot is AVAX. I won't go through all the level picking, but suffice it to say, you know, let's look at July 10th on here. So July 10th, AVAX was in a very different place. Let me make this a little easier for you guys to see. July 10th, AVAX was way down here, and the key level here, this purple level, I mean, it was essentially miles away at this point. July 10th, you know, $18. This level's up at $26. So, you know, the MATIC win was a good win, and I moved on and, you know, was doing other things. And then over time, I started to notice this pattern, and somewhere around this point here, I was like, hey, you know what? This is looking awfully familiar. We have a critical level. We have a rejection, a double, you know, the double rejection doesn't matter, but still we've tested it twice. And this is now sparking the idea of MATIC in my mind, because now we're, you know, 3 weeks out from the MATIC win. And I was like, you know what? I think this is going to happen. I think it's, you know, the technical fundamentals are there. We were continuing to make higher lows, so that's obviously very important. And we were continuing to resist on a critical level. So again, that's another important thing. It's not just any level, it's a very important level per the history of the chart. So I went ahead and I was patient, because that's another easy way to get all wrecked up on these plays, is just thinking you know what's going to happen and jumping in. So I was patient and waited for a particular setup. And in this case, I don't remember exactly what time frame we see it happen. But yeah, on the 45-minute, good enough. So I had actually, because again, this is a token that obviously in all the different episodes we've talked about, I have a lot of use for. So I don't mind holding it or using it in other ways. So I did buy a little bit here at like this 24 level before we actually gained what we needed to gain. But I did wait for the gain and the test. And as soon as this even looked remotely like it was going to hold, then I jumped in on a larger position, and we got the move that I was looking for. And we actually capped up here all the way to 30.77 from this 25-26 range. So that now got me thinking the same thing has happened twice. And in a particular market, crypto in this case, where these charts follow each other very, I don't know, humorously, or I don't know what you want to call it. Like, for example, layer the Bitcoin chart over this avalanche chart, and it's comical. That's the word we're looking for. You know, there's a little divergence here on the dump. You can see that avalanche kind of dumped first, and I think we went over that on a previous episode. We were like, you know, in the market of crypto, avalanche is even more fringe, bleeding edge type coin. So that's going to be one that gets de-risked first as people are exiting the market. And so it did diverge here from Bitcoin, but Bitcoin caught up to it, we all got together down here at the bottom, and then we started trading, I mean, in sync with each other completely. And now we actually are diverging a little bit again. So that could be, is Avalanche leading the way again now as people are getting more into speculative stuff? I don't know. That's too much trying to anticipate people's thought process. Point was, crypto charts follow each other very to a T. And, it's almost like there's a lot of bots trading this thing, or algorithms driving this, or whatever you want to call. So that got me thinking, this is a pretty, understandable setup, all things considered in the market. Zooming out, just like we saw on MATIC, we had, massive dump here. We're forming around a bottom, and when you get such liquidation of people selling and whatnot, we're certainly not in the market where that's just going to V and is just going to come down and shoot right back up. So it makes sense in that regard that, we're going to have an accumulation period to build that support back up. And it makes sense that accumulation period is going to lead to some critical level. And then when we gain that, it pops off. So that got me thinking of, does this exist anywhere else in the crypto space? And I was like, let's just do a little fun exercise here. And I went to CoinMarketCap and just started going through the top by market cap size, the top coins, and just started charting them. In particular coins that I am familiar with. And so I went through here. I checked Polkadot, Avalanche, DAI as a stable coin, MATIC, Uniswap, all this kind of stuff. Went through and charted it, and sure enough, if we kind of lay those out here, they're all, again, I've already marked these levels. They're all doing the very similar thing. They're just on slightly different time frames. So you can see up here in the top left, we have Ethereum, and its big level range is kind of in this area here, and you can see that we have gained it, and we're now pushing off of it, and kind of headed towards $2,000. So that I made a small play on that one because that was doing the confirmation and going. Over here you can see the Atom, which is a Cosmos blockchain. Same thing. We have this ascending triangle, if you will, where we're kind of pinching in here, and we're gaining this level, and we're confirming support, and we're popping off of it. These two coins on the bottom are a little bit behind, but remember, the patterns are in sync with each other, but the execution time frame is differing for any number of reasons. So the CRO token, the crypto.com token, this one is, has already done one test and rejection on this critical level, and we're kind of building up towards another one, so I'm keeping an eye on that. Algorand is another one, and this one seems a little bit further behind. So this is very reminiscent of where AVAX was in my MATIC story, and say MATIC is maybe more ETH here, where it's already popping off. But we're seeing, Algorand is doing the things it needs to do. It's making higher lows, and it's pushing up. And it actually, maybe I got my level slightly off. Maybe it's 36 cents. I didn't go into this chart super deep, other than seeing the setup I was looking for. And I'm just keeping an eye on this one, because if we start 41 was a decent level. If we push up and get that, then we're off and running. Point of all this was just showcase kind of what I'm looking for, how I look into things, how I look at plays. And again, I understand this is all crypto stuff. It doesn't have to be here. I haven't combed through equities super deep because, like I've said on previous episodes, I'm currently DCAing into indexes, S&P 500. That just feels like too much good, solid opportunity there. But I do believe that this kind of setup is likely to exist in your favorite market of choice, given the dramatic pullback we've had pretty much across the board. Nothing quite as percentage dramatic as crypto, but certainly equities, tech sector, tons of stuff are down. And honestly, not to make plays, it's a great time to go practice your TA and your price action, because I honestly don't think there's a skill that's more important. I'm far from perfected it, but I'm continuing to learn. And the more I learn, the easier it is for me to look at a chart and understand what's happening. And most importantly, understand what's important. Because there's so much noise and data in these charts. So highly encourage, just go chart, don't make trades, and hop in the Discord and let's talk about it.
Yeah, I always want to make more time for charting, and I try. One of the habits I'm trying to get into is kind of using TradingView. I really like how they synchronize a lot of your charts and stuff between devices and things like that. So I'll try to pull it up on a mobile unit while I'm kind of waiting for something, throw a couple levels down on a couple of, underlyings that I might be trading. And then it's real nice because when it comes time to trade, I kind of got those levels marked out there. And so it's a habit I'm actually trying to get into. Not super successful so far.
Yeah. But I mean, it's like, I think the reason I am so comfortable calling it such an important skill to constantly hone, is because no matter what your strategy is, if it's options, if it's straight trading, even if it's investing, you want good entries and you want good exits. I guess investing, you want a good exit, but technically investing, you're definitely looking on a much larger time frame, possibly looking at more operation fundamentals, but still, you still want a good entry. And all of these things across all these mechanics and trading styles, it happens with good TA. So I think it's very much worth the practice, or just somebody's talking about Tesla in the news. Okay, let's just go look at the chart and jot it and see what's happening with it.
Yeah, no, definitely. It's a skill that I won't say I'm amazing at, but it's definitely one of the signals that I've used as kind of a secondary check. I often equate it to being able to kind of read a map a little bit. Sometimes we go to, we take various trips as a family. We go to unknown locations that we've never really been to, and we might look up on there some cool place to go, right? And you look at a couple of pictures, you read a couple of reviews, things like that, and you're like, hey, this looks like definitely something I might want to go check out. But I equate the TA or the price action charting to looking at the map. Oh, is it really close to a freeway? Oh, it's on the other side of town. It might take a while to get there. Like, it still might be a cool place to go. But just kind of the path to get there is where I really think a lot of this price action and technical analysis comes in. So for me personally, I'm constantly looking at volatility plays. So, I look at a bunch of underlyings and I say, oh, volatility is really increasing. Volatility is at a historic high, or volatility is not high enough. And those are kind of my initial gating signals. But that doesn't really tell me if it's exactly time to do that yet, or what's the aura around that particular underlying. And that's really where I start then pulling out the technical analysis, the charting, where I then start looking and say, well, this is meeting all my criteria for volatility, but I can see that based on this charting, it's likely to pull back another, $1, 50 cents, something like that. So maybe I just better wait a minute. The volatility is going to stay there. It's still going to be a good volatility play. But if I just wait a little bit for it to come back and pull down to this level and then make my entry, it will be a better entry. It's still a good ride, a good place to visit, but it's more about, when's the best time to get there? Is it during rush hour, or is it during, before rush hour or after rush hour?
One of my favorite plays, I don't remember what the ticker was. It was one of the first options plays I think that you got me into, but it's still, to date, my favorite play to make anytime I see it. I'll take it all day long, is when a particular stock, whether it's earnings or whatever it is, gets that accelerated dump and it lands on one of those critical levels. So in the charts that we just looked at, like with those levels I kept saying were critical, picture something on the flip side crashing down and hitting it. So volatility is insane through the roof. And because I have a decent understanding of what I'm looking at from a TA perspective, I know that that's a critical level, and we go and open up a naked put on it. And that's something that just telling somebody like, oh yeah, this stock is just crashing, and so I sold a naked put on it. Like, people are like, are you nuts? It's crashing. But it's the confidence of, yes, but critical level, and it could still break this level, but everything's elastic. Well, we've gone back there, that even if it's going to break this level, probability is in my favor that we're going to get a little bit of a bounce here. That's all I need to clear off that volatility, close out the thing, never worry about whether it recovers or dumps from there. So that's my favorite way to utilize TA and grab a quick opportunistic profit.
Well, that brings us to the end of this week's episode. Hope you kind of like that visit there with some of the trade setups where you're kind of bumping up against some level and you're getting higher highs, but not breaking through there. And you learn a little something to look for that pattern. As Viper said, it really is everywhere right now. A lot of risk on is starting to come back. And, volatility is really starting to shrink and collapse. I think the VIX might have been under 20 here recently, and that hasn't happened for quite some time. The sun is coming out, the land is drying, and me, being the contrarian trader that I am going to start looking for the potential for taking out some insurance hedges here soon. I'll put a link in some of the previous episodes where we've talked about, there's no time like a sunny day to buy your insurance. It's the cheapest it's going to be. And, there's some clever ways that I've come across that kind of reduces the cost impact of that insurance, but still protects you if the rain clouds come and it starts to storm. I don't think we're quite there yet. As Viper kind of pointed out, a lot of this stuff we're starting to ramp up here. So in the coming days, that's definitely something that I'll be looking out for. Otherwise, I hope all is going well for you guys out there in the market. Have fun out there. And remember, think outside the block.